All right, good.
What's up, guys? Welcome to another episode of the Stock Bros podcast.
All right, so we are available on all major podcast platforms. If you guys didn't know, and before we get started, don't forget to subscribe, like the video, leave any comments, and tell us what you liked or didn't like.
Also, you can use our links below in the description for a free Robinhood stock and $5 free invested in Acorns.
All right, so with that note, let's get started. So we're talking about cryptocurrency and Bitcoin today. So let's start with what is cryptocurrency. So first of all, Bitcoin is a cryptocurrency, and a cryptocurrency is just a type of digital private money that operates without the involvement of a bank or a government. So it's person to person. There's no intermediary. There's no middleman. When you pay someone, it goes right to them without like a bank or anything, which is pretty cool. And then if you want to say who identified it.
So Bitcoin was first formalized or introduced in October of 2008 by a guy named Satoshi Nakamoto. No one really knows who he really is. He kind of kept his identity secret for a while. There's been numerous people that have come out and claimed to be him. There's no real evidence of who he is, but So that's that.
And then how Bitcoin works, it uses something called blockchain to verify your purchases. And what blockchain is essentially it's just like everybody keeping track of your transactions. So there's thousands of people keeping track of everyone's Bitcoin transactions. And then basically what happens is these people compare notes to each other to make sure they match up with everybody else's.
And it makes it harder to hack or trace, actually.
Yeah. So if all these people notice like there's something wrong with someone's transaction, that's basically how they it's basically like the fraud department for it's a fraud department analogy as if you were using a bank. It's basically the same thing, except that this is managed by everybody in the community.
Right. There are no federal regulations or governing boards.
Exactly. So yeah, this is how they make sure you don't double charge yourself. This is how they stop people. I don't even think fraud even happens on Bitcoin. I was reading about that. I'm pretty sure it can't.
I couldn't find any real examples. This is probably the most researched topic we've ever done so far.
Yeah.
I spent a lot of time researching this, and I'm sure you did too. And
yeah,
it's very complicated, and we're trying to break it down as simple as possible.
Yeah, and then so also you can accidentally lose your Bitcoin. Like if you delete your Bitcoin, you're screwed. So you just got to sort of be careful with that. In a sense.
I guess I was reading about a Bitcoin wallet is where all your the history of all your transactions are, and if someone hacks your wallet, your digital wallet, or you delete or you forget your password to your digital wallet, all your Bitcoin's gone. You can't get it back.
Exactly. And then, so Bitcoin is, I'll do part of this segment and then you can jump in, but Bitcoin is gaining more and more credibility. So recently, the Carolina Panthers, this was just the other day, announced that they're going to pay half of Russell Okung, I hope that's how you pronounce it, Okung, $13 million contract for 2020 in Bitcoin. And actually, the only reason that the whole thing wasn't in Bitcoin, because I read about this, he said his girlfriend wasn't fully on board with it yet, so he only did half in Bitcoin.
That's a breakthrough thing, though. That's incredible. First NFL player.
And then if you want to jump in for the rest of the part.
It's definitely getting more and more credible. Visa, back December 1st, announced that it's partnering with cryptocurrency startup BlockFi to offer a credit card that rewards purchases with Bitcoin rather than airline miles or cash back, which is pretty amazing. And the other thing is PayPal announced in October that it will enable cryptocurrency as a funding source for purchases in 2021. So it allows users to make purchases on its network with more than 26 million merchants, which is pretty amazing. It's definitely gaining steam, so it's getting more and more credible.
Mm-hmm. I just want to jump in. So we're gonna throw a picture of this up on the screen, or a screenshot.
Yeah.
But this is unbelievable. But Bitcoin has its rate of return is 9,000,000% over the past 10 years, which it doesn't even sound real. But if you had invested $1, I think 10 years ago, you'd have $90,000.
$90,000. Yeah. When I saw that stat, and before I sent that to you, I researched so many different sites because I just couldn't believe 9,000,000% return. It just sounds unbelievable.
And then if we compare that to the S&P 500 over 10 years, it's just 197%, which is hilarious.
Which is still really good, but compared to Bitcoin, it's like, what? Yeah. So, and gold is only at a 36% return in 10 years. Mm-hmm. So let's talk about the risks and the pros and the cons of potentially buying Bitcoin. So I'll cover the possible risks. So cryptocurrency is not insured at all by any governing body, which we talked about earlier. It's not insured by the SIPC. It's not insured by the FDIC. The SIPC is an organization that helps restore customer cash or securities for firms or brokerages that go bankrupt or that can't pay you, or they can't come up with the money if you try to take out the money. FDIC is a government is actually through the government, and that's in case a bank fails and your money is insured up to $250,000. So it doesn't have either of those insurances. It has little to no market regulation. It isn't recognized as an official currency, and it's banned in several countries. Actually, I was reading Russia, China, Vietnam, several other countries. It's banned, or it has some type of regulation on it. So a couple of fun facts: famous people, Ray Dalio. He's a founder of Bridgewater, which is the world's largest hedge fund, and Warren Buffett, which we all know, Warren Buffett, the Oracle of Omaha. He's a very famous stock investor. He made his fortune through the stock market. Him and Ray Dalio are actually 100% against Bitcoin, and they both kind of call it a scheme or a con. So it's also very volatile. So it's not really an effective source of storing your wealth or gaining any interest because you just don't know. And security risks too. You could, like we were talking about with the wallet issues, the cyber wallet issue.
Yeah, so, if you have $5,000 and you want to just put it all in Bitcoin, you're either going to get really lucky or really unlucky. It's risk. It is risky, but I mean, technically, because you don't really know what's going to happen to it. Yeah, it's gone up 9,000,000% in the past 10 years, but could it go down that same amount?
You never know.
You don't know.
So
it's very hard to predict.
Yeah. So some of the possible benefits, it's diversification. You know, if you want to add some type of, if you have gold and you already have an SP 500, you already have, stocks, bonds, commodities, maybe you want to throw some money in crypto. It's greater liquidity and relative to other cryptocurrencies. It's the most popular cryptocurrency.
And explain what liquidity is real quick.
So basically you can withdraw the money right away if you need to. So it's increasingly wider acceptance. It's gaining increasingly wider acceptance as a payment method, which we've seen with Visa, the NFL paying their players in cryptocurrencies. Internationally, it's actually easier to do international transactions with Bitcoin than it is in exchange rates in some countries. Almost no fees. And it also makes it possible for buyers to complete their payment without divulging any sensitive financial information like hooking up a credit card or debit card. So those are the possible rewards. So,
I also just want to throw in Bitcoin is the first. There's other cryptocurrencies, but what made Bitcoin so successful, because I was reading about this, is the blockchain really is like a revolutionary thing because nobody could figure out how to keep it secure. And with everybody basically checking on each other, with people recording this in a data log and comparing notes, it's how they make sure there's no fraud.
So listen, to wrap things up, I would recommend throwing a little bit of money in Bitcoin. because you never know. I would say keep it smaller than 5% of your overall portfolio. If you want to throw in a couple $100, it's really not going to hurt you that much, and you let it sit for 10 years. Maybe 10 years from now, you put in $100 and now you made $100,000. Who knows? So why not? I threw in $5 just to try it, just to have something in there. Because if there's a 9 million % growth again, I don't want to miss out on that. But I also don't want to put too much money in it because I don't fully trust it. So I think we're on the same page with that, right?
Yeah, pretty much. Yeah. Does that wrap it up?
Yeah. Or, so that's it for. Go ahead.
Yeah, that's it for today's episode. Please don't forget to subscribe, leave a like and comment.
Yeah. Also, don't forget, if you want to start investing, you can use our links below. And until next time, thanks for listening.